What's up, guys? It is Tuesday, February 14th. It's 9:59 a.m. Happy Valentine's Day. And let's dive into crypto news. So first off, Chain. Chain is the gift that keeps on giving, man. I'm telling you, this coin has not stopped staircasing. It's quite unbelievable to see, especially calling out before. So everybody who got in on Chain, I'm sure you guys are loving this action. We're up like 70%, 68% right now. Even if you got in around like here, you're still up like 50%. So I still think we haven't seen the grand finale yet. I'm waiting for a huge spike in volume, a huge parabolic move, just straight vertical, and we still see the volume rising here. So, and looking at this price action, we could be on the brink of it. Would not be surprised to see 50% in a day. I mean, we just started pumping. So this is February 10th. It's only been 4 days. Usually when you see pumps and like sustained moves to the upside, those can last for around 10 days to 3 weeks. We're only on day 4 here. So exciting times ahead. I'm glad we all caught this. So now let's keep going because today they released the CPI data. It came in, let me pull this up, at 6.4%. The forecast was 6.2%. So they undershot, and then the previous was 6.5%. So it was down 0.1%. So you can see that it's lowering the CPI data. So how that affects the markets, we'll have to see. I am looking at the price action today, and always it's whipsaw action. We saw a move to the downside, and now we're back up. So yeah, there's a strong wick to the downside. We're back up. So it does look like there was initial reaction of like kind of like uncertainty, and now the dust has settled and we're pumping back up. So that's what we're seeing. Now let's go to the next thing, because this is happening today, the crypto crash, why financial system safeguards are needed for digital assets. So I'll have to tune into that, see if we can pull any clips as far as important like golden nuggets that were said in the hearing, but that's happening today as well too. So don't be surprised if any news comes out regarding this. So now let's go into the rest. So we have this. So crypto crash, why financial system safeguards are needed for digital assets, today at 10:30 a.m. So in about 23 minutes. So the Committee on Banking, Housing, and Urban Affairs will meet in open session hybrid format to conduct a hearing entitled Crypto Crash, why financial system safeguards are needed for digital assets. The witnesses will be Mr. Lee Rainers, Policy Director, Duke Financial's Economic Center, Professor Linda Yang, Visitor Scholar on Financial Technology, and then Yesha Yadav, Vanderbilt University. All hearings or webcasts are live, so I'll have to check into this later for the live video, and as it's live, I'll report on it and do like some short videos. So that is happening there. And then we have IRS warns users against claiming losses from collapsing tokens. So pretty soon here, we're going to have to file. The deadline is April 15th. So I'm going to be using TaxBit. So I use TaxBit. You can kind of just log into your exchanges through that, and it'll automatically like calculate your gains and losses, as well as the exchanges uphold Coinbase. They have the forms that they give you. So, and then I do it with TurboTax. So if you're thinking about how am I going to do this, all this stuff, that's what I do. But you can talk to your regular accountant about that. So HDFC Bank begins offline payment pilot under RBI Sandbox. Apart from executing transactions in known network areas, such a facility will be of help in urban pockets experiencing bad networks and also in aircraft. So HDFC Bank has begun the pilot in partnership with Crunchfish, IDFC Bank, and M2P FinTech under the RBI's regulatory sandbox program after getting the nod in September 2022. The country's largest private sector lender, HDFC Bank, on Monday said it's attempting to execute digital payments in an offline mode under a regulatory facility to test innovations. So if we go down, it can be noted that there is a facility which helps users with feature phones undertake unified payments interface transactions. So the lender will roll out the service as part of a limited pilot for 4 months. In more than 16 cities and towns across the country, the offline transactions amounts would be limited to up to 200 rupees, I think, per transaction. So digital payment typically requires either the customer or the merchant to be offline to get executed. The pilot is attempting to ensure a transaction goes even when both customers and merchant are fully offline. As soon as either the merchant or the customer goes online, the transaction gets settled. This innovation will accelerate financial inclusion in remote areas by enabling adoption of digital payments as both merchants and customers can do transactions without any network, the bank's country head of payments said. There we go. Now let's go to this. So Morgan Stanley, falling stablecoin issuance is negative sign for crypto trading. U.S. regulatory efforts are likely to focus on stablecoin regulation. So stablecoins play a vital role in crypto trading, and their products potentially compete with the fiat banking system, Morgan Stanley said in a report. The bank notes that the U.S. regulators have begun limiting stablecoin products, adding that stablecoin issuance is important for crypto traders. Falling stablecoin market cap is an indication of falling cryptocurrency liquidity and leverage, the equivalent of quantitative tightening for the crypto market, the report said. The stablecoin is a type of cryptocurrency whose value is pegged to another asset, such as the dollar or gold. If we go down, rising market prices entice traders to take on more leverage in the form of borrowing stablecoins, which was then used to buy more crypto. Falling market prices were catalyzed by a reduction in crypto liquidity caused by traders closing long crypto positions, followed by redemptions of the stablecoins received. The bank expects U.S. crypto regulatory efforts to focus on stablecoin regulation. It says issuers will probably have to register and prove they hold enough liquid assets to back the issued stablecoins. All stablecoins rely on market trust and the system's ability to keep a stable value. There we go. So as this is happening, so Binance stablecoin outflows top 1 billion as BUSD supply shrinks. So we got some red flags here. So if there's about to be a run on BUSD, I'm sure BNB will get affected. This could be the short of the century leading up right now. So we're going to have all eyes on this kind of situation here, because that will be a huge trade, a huge short. So we're eyeing this. And if you want to know when we're going to be taking something like this, or if we're even going to do it at all, come join the Discord. I'll put the link in the bio. Now we have Avalanche blockchain saw 1,500% transactional growth in 2022. Such transactional activity came even as the total value of tokens locked on Avalanche-based decentralized finance apps slid from 2021's 15 billion peak to just over 900 million in November 2022. So I believe Avalanche is going to be like the Solana of this run. I do think Avalanche is a hidden gem. I stacked up on it back when Amazon announced the partnership with them. I do believe that Avalanche will be a big outperformer in this run and has a good shot at kind of being in the top 5 when it comes to smart contract platforms. It probably already is if we're really kind of breaking it down. So Avalanche, definitely a long-term hold. Blockchain Association files a MICUS brief in Coinbase insider trading case. The crypto lobbying group is arguing that the SEC is engaging in absentee enforcement because the creators of the 9 tokens that are at the center of the insider trading case are not linked to the case at all. It's quite crazy, to be honest, the lengths that the SEC is going to just kind of like rein everything in. So they're naming these tokens. One of them is XYO, which we hold, and trying to say that they're securities, but not putting a case on the actual projects through a kind of this backdoor loophole where they're kind of going after insider trading case at Coinbase, and then they say that these are securities. So this is getting out of hand, to be honest. Biden to name Fed Vice Chairwoman Lael Brainard as top economic advisor. Brainard has been leading the U.S. Federal Reserve's work on a potential digital dollar and has been minding the store on crypto policy discussions until the central bank appoints its permanent vice chair for supervision. So yeah, she's always the one that's talking about digital dollars, Cbdc, the payment system, FedNow. Recent volatility has exposed serious vulnerabilities in the crypto financial system, she said in a speech in London in July. Bernard said the Fed has been closely monitoring recent events where risks in the system have crystallized and many crypto investors have suffered losses. Strong regulatory guardrails will help enable investors to build a resilient digital native financial infrastructure. There we go. So now we have this. Crypto's banking problem. Industry needs access, but U.S. regulators keep digital assets at bay. So federal banking regulators seem to have free reign over crypto U.S. destiny, and they're using their power to push it out of banking. So we're going to see something come to this, that Congress is going to step in, because that would be a huge fail as far as U.S. policy goes on crypto. They're saying, what's next? So the regulator's stiff arming is a problem for crypto because being tied to banks would add legitimacy to crypto in the minds of ordinary Americans. Perhaps if the crypto world stabilizes over time, regulators will become more willing to let crypto into the heavy regulated banks. But for now, it looks like regulators want to put a wall between crypto and banks, and that will probably contribute to the feeling among many consumers that crypto is too risky or a niche for them to get involved with. But we still see Fidelity launching Fidelity digital assets and crypto for retail. And you're still seeing Cash App and Venmo able to buy crypto in there. So there's like kind of this kind of double thing going on where they're trying to keep it out of banks. But as far as like, I mean, Fidelity, as far as BlackRock and as far as these payment providers, they're letting them in. So SEC to make it harder for hedge funds to work with crypto firms. The rule change would make it harder for crypto firms to become qualified custodians. Unreal. This guy's something else. Something else. So let's keep going. So this says crypto markets analysis, Bitcoin funding rates shift into negative territory amid rising investor caution. Negative funding rates reflect bearish sentiment. I don't know why everybody's so bearish because we're still over 20K. We came from 16K to 20K. Look at the red here. So we had the red come in. I mean, we're going sideways here and the funding rates were up, but then when we had red came in, it's like whenever the majority shifts their sentiment to bearish, we pump. We had red come in and then that was our pump. And then we had the bullish kind of sentiment come back in and we kind of leveled off. Right now, we just flipped the red, even though we're still up here. And it looks like we're probably going to bounce from this level based off of the majority thinks we're going to keep going down. So this is very interesting over here. That's going to be on the radar. Then we have this. So R3 Forbes Blockchain 50 2023 has just been released, showing that global enterprises continue to invest in DLT to help drive efficiencies. We are delighted to see a number of these projects underpinned by Corda. I wish I could try pulling this up yesterday to see what companies, Alphabet, Ant Group, Aon, Apollo, BlackRock. So there's a lot of big names in here, but it's gated off, so I can't really dig deep on that. So reminder, Quant and XCC are building together. The final shakeout coming must happen before regulation. So all these coins that are in it for the long haul are like kind of tying up with each other, and you love to see it. Then we have this new German industry giant Siemens issues its first digital bond on blockchain. The bond has a volume of 60 million and maturity of 1 year. So there we go. So we're seeing the tokenizations of debt, corporate bonds. There we go. So now let's keep going. We got Dubai introduces crypto regulations in partnership with Hedera Council member DLA Piper. The Toko platform built on Hedera used to support regulatory authority. So yeah, we're starting to see the dust settle as far as which coins are going to really be in it for the long haul. And we're in all the right ones, I would say. Then so we've seen that. And then we have BIT. So BIT's digital currency management system is innovative, inclusive, secure, private, resilient, fast, interoperable, scalable, and configurable to drive wide adoption of digital currencies across the financial ecosystem. So we know that it's built on Stellar. So built on Stellar, and we're seeing that they have all the features to really take it global with the Cbdc. So there we go. And now we have this. February 13th, this was yesterday, freeing trapped capital to drive business growth. So if working capital is the lifeblood of a business, then trapped capital is the bane of a corporate financial executives around the world. When a business expands into a new market, they are often required to pre-fund a destination bank account in order to make transactions in that market, otherwise known as trapped capital. Businesses have unfortunately accepted this process as the status quo, but the knowledge that this cash could otherwise be used to pay down debt, fund investment opportunities, or expand into new markets is widespread among corporate financial executives, particularly small to medium-sized enterprises that face challenges with liquidity sourcing. Traditional payment rails and antiquated pre-funding requirements are an enormous but hidden economic drain on emerging markets and small to medium enterprises that severely impact business expansion, throttle competition, and inhibit regional economic growth and financial inclusion efforts. As global growth slows and bank lending and services scale back, freeing trapped capital through crypto-enabled payment solutions is one compelling way for SMEs to increase liquidity and fund expansion. Trapped capital in foreign accounts. So cross-border payments can be facilitated by a small group of correspondent banks that operate within popular transaction corridors. These banks require corporate customers to pre-fund accounts in local currencies on each side of a payment to provide the liquidity necessary for a transaction to vendors, suppliers, employees, etc. This practice is not only expensive and time-consuming, but tying up cash abroad can significantly harm an SME's ability to operate and grow. Yet it has been an accepted pain point for businesses for a decade with little to no modernization. Beyond this opportunity cost, these accounts carry other hidden costs and obligations, such as the human capital needed to manage them, which can also sap an SME's growth potential. Constant forecasting and shifting of liquidity between accounts across multiple markets necessitates an intimate, up-to-the-minute understanding of local economies and compliance requirements, various fees, taxes, exchange rates, even local holidays and languages. This complex balancing game requires the oversight of entire departments throughout the business. Most SMEs cannot afford to employ dedicated teams with this type of expertise, and instead must cobble together resources, which can lead to mistakes and suboptimal performance. Worse, internal teams, even those at large companies, often still rely on manual solutions to track cash movement and the flow of funds across our operations, resulting in more errors and expenses. So if we keep going down here, shrinking number of correspondent banks. Even for those businesses that can handle the expense and opportunity costs of managing foreign bank accounts, access to correspondent banks is dwindling. Despite growing cross-border payment volumes, the number of correspondent banks is steadily declining and becoming more concentrated. This retreat is especially acute in emerging markets because of low margins and perceived risk. Reduced access to the global banking system can cause the overall cost of cross-border payments in the regions to skyrocket and prohibits SMEs that would otherwise be primed for expansions from breaking into or out of these emerging markets. The cumulative effect of this limited access can be devastating, suppressing economic growth and development, stifling competition, and causing significant negative impacts to local financial inclusion efforts. So freeing trapped capital with crypto solutions. In a time of slower growth and restricted lending, freeing trapped capital is critical for SMEs in search of growth in the emerging markets they benefit. Technical innovation is the key to making things happen. New payment methods, some pioneered by fintech firms, will drive the proliferation of digital transfer channels in markets underserved by banks. Ripple's on-demand liquidity solution helps free trapped capital for SMEs by leveraging crypto-enabled payments for faster, more reliable cross-border capital flows. Available 24/7, global transactions settle in seconds, not days, which dramatically reduces costs, increases transparency, and reduces pre-funding requirements. Then it talks about with Tranglo and how they're eliminating it for 20 countries with ODL. By partnering closely with Ripple and introducing ODL to new markets, we aim to further the ambition to provide accessible and equitable financial services to the masses. Additionally, Ripple's global payments network is available even in challenging corridors like Mexico and Brazil, and companies using ODL can quickly and easily secure 7 days of interest-free flexible credit to counter the limited or slow access to credit from traditional banks. The crypto solution combines improvements in speed, savings, and working capital to prime SMEs to fuel expansion efforts in an area of uncertainty, economic struggle, and suppress global growth. So there we go. So a lot of big things happening. I'm sure there's going to be tons more news to come out later today as far as with this hearing and everything. So we will keep our eyes on it and we'll keep you up to date in real time on any potential things that pop up. So subscribe, hit the notification bell, get updated real time for that. And leave a like and a comment. Let me know which coin or what information I should do a deep dive on later today. So join the Discord. Link will be in the bio. I'm looking forward to see you guys join that. And I'll see you in the next video.